It's very important to have a look at this closely. Not just the payoff, but the maths and science behind this. If your stop losses are getting hit in a low VIX environment, maybe your structure, the trade management is wrong. When VIX is low, this calendar, which you're about to learn, speaks loudest. Before we start, I have to give you standard disclaimer that strategy explained is only for educational purpose. There is no strategy which is holy grail. There is no strategy which guarantees income in the market. So do keep a note of it. Options trading, we know, contains a certain amount of risk. Now, let's talk about number one issue which we have in our hand today. That is low VIX. I hear it all over social media. Let me show you the problem and then we try to fix it. So this is India VIX chart, a daily chart. And what you see, something very surprising, is that VIX is really touching 9.87. It has come in single digits. What does this mean in options trading point of view? This means a couple of things. This means that if we make any credit strategy, maybe straddle, triangle, anything which is popular, it really have very low and slow theta decay. Point number one. Point number two, that the range which you used to enjoy when the VIX is 15, 18, 20, that big, huge range, especially if you trade weekly options or if you trade monthly, that range is really heavily impacted because of low VIX. So this is a completely different pitch, a completely different environment to do the option trading, and it's really testing our might. It's testing our skill how to build the calendar, and building is easy, just 30% of the job. After that, we will discuss how to adjust it if things go wrong. So watch this video till the very end. So here we are on an option simulator. I'm gonna make the calendar very quickly. Futures is currently trading around 25,600. How do we make a calendar? It's very simple, that we sell the current month strike, which happens to be September. As you see, we are selling an at the money call and at the money put, but at the same time, we look to buy the next month, which happens to be October. And which strike are we buying? We are buying the exact same strike which we sold. So we bought 25,600 call and we also bought 25,600 put as well. Same strike, same quantity, very easy, quite copybook style to do a calendar. When we do something like this, this is how your calendar looks. Now, calendar, as we know, it's quite effective strategy when it comes to a low VIX environment, because this is some sort of a debit strategy. As you know, if we have a look at the strike, it's exactly selling the same strike in September and buying the same strike in the next series, which happens to be October. When you make a calendar on any strategy, there are only two possibilities basically. Number one is that the trade outcome go favorable, and number two is that the trade start to go on the loss side, probably hit a break even, and then what we are going to do. And guess what? I'm going to tell you both the things on a simulator, and let's see how this calendar sits to be. As you can see, in terms of margin is not fixed on a simulator, but it gives you a certain amount of idea that if we make an at the money calendar, this is the margin which we expect to pay upfront in this. Now let's make a calendar and discuss the pros and the cons of it. And as always, I'm going to spend more time during the challenging environment. That's what you're here for. So here we are on a simulator and we picked an April series. VIX has been low from quite some time now, and we are looking to do an entry in a simulator in the beginning of the month, which happens to be 28th, right? To save time, I've already preloaded the strikes for you, which is quite simple. At the money sell and at the money buy. We are selling the current series, buying the next one. And this is how it looks at the moment, absolutely similar to the last example. And like I say, let's not give a lot of importance to how it looks on a payoff. Retail watches payoff. Professional watches the adjustment points. What to do if things go wrong, what to do if things go right. Now let's see on a simulator, we are going ahead, we are doing it intraday itself, 9:30. Suppose if we enter on a simulator, and what do we see in just a matter of approximately an hour or so, this looks to be quite fine for us. And if we just simulate and we just simulate and we just simply go ahead, what do we see is that during the low VIX, calendar spread turns out to be a debit strategy, something which we can consider across many strategy which is there. I'm sure you must have watched my videos as well over YouTube, right? How do I really make the calendar? I make it in a very different way. And here what you see is that we are 1 day into the trade, and we are getting some kind of it's a favorable event for us, so we can obviously book it, we can square off. But I know what you're thinking, that not all calendar will turns out to be in our favor. In fact, if calendar breaches this break even, which you can see here, the green is turning into red on both the sides, this is going to be the real test of our skill. How do we maneuver it? And most importantly, is it possible to lock the gains in a calendar, right? That's going to be very interesting. How do we make it fragile to stable with one move? Let's discuss the trending month now. So this time we've got a July series where we look to short July and long August. The payoff looks absolutely same, but the behavior will not. Now let's talk about this. Let's go ahead and let's see if it catches any kind of a move. And we could see that from the very first day, it is sort of catching a move and it's trending. Exactly something which you wanted to see. Now I want you to focus as soon as the break even is breached. Guessing ends when the plan has the detail. Let's go ahead now with this, and it looks to be about all right. Obviously we're not gaining much from it, and that's not what we actually want even, right? So let's see, we're looking for a challenge, and what do we see on 11th? After 11th day, it has really, you see this line is the future price, and what do you see, that has come from green to a red now, and obviously we're looking at some minus. The trade is really challenging us. So now what should we do? We have to do something, because here if market just continue to go down, then we can expect a bit negative. Now this is the real test of our adjustments. Now let's talk about the adjustment. I'm gonna make it slow so you understand it in one shot. So what we're gonna do is we have to go to the next series, which is August. Remember, the current series running is July. We open option chain. Okay. Now what do we do is we see where at the money is. At the money is around 25,400. And what we do is we go out of the money right here, because we look to target the call side now. And here on the call side, what we could do is, it's a good option. We can look to sell 2 lots of the call. Now, why are we selling August? Because July, if we go so far out, hardly it's gonna have much of a premium. But August give us a little cushion. So obviously we can sell this, and after this obviously we have to buy some kind of a protection, right? As you know. So what do? We again go to the same month option chain, and we sold 25,800. Now we go, this one is what we sold. We go slightly more above the market, right? Really above, and maybe we pick a round figure, maybe 500, and now we look to buy this. This level of detail while trading calendar, because calendar is a different beast. The low VIX situation demands different level of skill set. Here what you see is, now if market continue to go down, now obviously payoff is never a true representation. If market is go down, then the break even is obviously quite far, and market is going down already in this particular simulation. Now let's see, things gonna get very interesting from here now, right? It's very interesting. Option trading is one of the best. If you have the interest in this subject, this options trading, there's so many things we can do. And here what you see is that just on Monday, right, we sort of bounce back in the trade, and we're gonna go slow, and let's see till what extent it can go. And as you can see, it has really, sometimes payoff will become like this. That is okay. You can see now market was here, and market have reached 25,000. Initially the market was 25,700. So a big solid move is happening in the market. This is exactly what the calendar spread traders do not like, and this is exactly what is happening, and what also is happening here if you pay little attention to, right? So this is happening because we got some extra credit when we trade something like this. And if it go really far further out, what you see is that we again came back in negative. Like I was telling you, we wait for it, we give time to the trade to swing back in our favor. If it turns back, it's fine. If it doesn't, I'm going to tell you the VIP points as well in this. Okay, now what do we see is that around 24th of July, market have sort of, it's gone further out, it's reversed a bit. So maybe we got some level of comfort with the trade. And now we have to do something even better than what you see on the screen. And exactly what I'm going to tell you. One simple thing can change a lot of things with the trade. Now, look into the original position. You all wanted advanced stuff over YouTube, right? So I'm taking one step ahead. Now, in the beginning, we were trading with 4 legs, 4 strikes. These call, right? We shorted 2, we longed 2. This call which we longed and this put which we longed of August. This have solved its purpose. So now we look to exit it. We're gonna do it very quickly. Done. We exited both the legs quite comfortably now. Also, the spread which we sold double quantity, it is so far now, so it has also solved its purpose. So we look to exit at the current market price, which you see at the background, 813.8, right? 271 became 123. So we are just exiting. We are just exiting whatever the price is at the moment of the calls which we bought plus the double spread which we sold, and we are holding this position now. What we're gonna do now, we will open option chain. One step we're gonna do in this, that is first we go to July, right? Why? Because we have only 2 positions open, which is of July, right? It's very simple. I'm gonna give you a recap as well towards the end, and really a very strong point is coming into the market now. So here we are, right? We are here at the moment. 25,700 is what we sold when we were creating the strategy, right? And now it's time for us to do adjustment. So what do? We go 1 strike above and we can buy this particular call, 1 quantity. Remember, originally we made a straddle, this one, right? When we were making a calendar, right? If you remember. And now we are doing adjustment. So we bought a call, 1 strike up. We buy a put, 1 strike down. Done. Let's see how things look now. As soon as we do this, this is how the payoff looks to be. If we do not do this adjustment, and if market continue to go down, right, you could see that how this tail is really, going into the red territory. But as soon as we do this, what do we see now? If market continue to go down as far as it can, or if market continue to go up, also what you see is that we have a little peak here, just like a straddle, right? This is where the peak profit is. Obviously, the possibility of this happening is low, but there is still some amount of possibility, right? Now, when you do this versus if you do not do, I'm sure the contrast is very, very far. And I'm quite sure that many of you must be getting this kind of adjustment for the first time. Maybe if you've been trading from 5 years or 10 years. But these kind of tricks which we can do in options, and if something like this really resonates with you, if something like this really helps you in your trading further, and if you would like to go deeper, and now I'm going to tell you the VIP points on this. There are some more things which we can do this. Also, the hard exit, which I want to tell you, because risk cannot be zero. We try to improve on our trading. Let's see what the other things which we can do in this. Adjustment is based on break-even breach and not before. A lot of traders try to hurry their adjustment and try to adjust as soon as the PNL from green becomes red. We can wait till the break-even is breached. That is a better comparatively a better way to do. Number 2, importance of keeping a hard exit. Like I told you in the beginning of the video as well, there is no trading, no strategy which is 100% holy grail, but there are adjustments, and in trading there is certain level of skills involved. Just like when we adjusted it versus if we do not do any adjustment, right? You could see a difference between both the things, realizing that low VIX is a very difficult situation for option selling. If you think that theta decay has some kind of an edge, low VIX is one of the most challenging situation which one can have in the market. But like always, one can always learn better things to do in the market, be it low VIX, be it high VIX. But if you are somebody who's doing the same strategies, maybe the same public strategies like short strangle, straddle, maybe Batman, think how you can make it better. I've made a playlist that can give you some ideas on how you can improve on this. That's why I say you can always learn it and try to do it better, step by step. Thanks for watching, and I wish you all the very best. Take care. Bye.